Hello, trading is closed on Tuesday, April 26th, 2022. Let's do our disclaimer first. This is my trading plan for tomorrow, Wednesday, the 27th of April, 2022. Please remember I can be completely wrong. Any trades one makes should be at one's own risk. Please tell your friends about the channel. Please click like. And if you want to order my webinar, please tell me where to send it. I need your address. Look for the pattern with the early high, which this is, and tomorrow should have the early low. Yesterday looked like a reversal day to many people. MEJT didn't believe it. Said unless we gapped up, which didn't happen obviously. We had a target of 42.4480, and that printed. That's this red line. Now, yesterday's action was a good example of the rule that when you get a signal, it has to be confirmed the following day. When you get a bull signal like this, you have to confirm it by going past the close by 1 cent, and if you don't, it doesn't count. And it's important for today's action because the first 5-minute bar was at the high of day. The last 5-minute bar was the low of day. It's a very negative pattern. And for confirmation, all you need to do is to go past today's close lower by 1 cent. And it gives a negative signal. But if we gap up, that doesn't count. Now, I don't know how we're going to open tomorrow. But negative as this is, you still have to confirm it tomorrow. I think there's a chance that won't happen. Doesn't make me right. Only thing MEJT had to say was we had a sell signal, but we printed the minimum target immediately. There was support there, but obviously support didn't hold. These lines are Tom DeMark's TDST lines. There's support to 1 bar under the line. The only one he really counts is this last one. So we're still within 1 bar under the line. So until you print a bar completely under this one, way down here, you're still in support. But if you look this other TDST line, originated right here from the same consolidation. So as far as I'm concerned, you're at support from 2 TDST lines here. You're also way under the lower Bollinger Band. It's hard to get follow through when you're that far under the Bollinger Band and you've cut through 2 of these lines in a day. Now, that doesn't mean it has to work, but if we gap down here, I think that's the stuff crashes are made of, because this would be major support, which didn't hold, in an already oversold condition. When you're way under the Bollinger Band, you're in oversold territory. And crashes only happen from oversold conditions. But I don't think that's a given at all. Let's look at some of the reasons why. Not that I'm fond of catching knives, but falling knife. But let's look at what the support is in addition to these things. Well, first of all, here's our E-mini contract. I didn't think this volume spike was high enough to impress me, but now that it's higher than its neighbors, I'm at least going to start to pay attention. Here's some important trend lines. When this trend line broke, it targeted the price 362 handles under the line. The line is now where? The line is around I guess 275 handles north of where we are now. So We're actually pretty close. One more day ought to do it, but that doesn't mean it has to happen tomorrow. We now are at a different trend line. You connect this high, this low. You're right there. That's a very major trend line going back years. And it's the rule, you either gap under the line or the line wins. By the line winning, I mean if you don't gap under it, any break under it, if you break under it at all, it should retrace at least to the line. So in addition to what we showed on the last chart, we have trend line support here, and that's not all. Here's our long-term count. We still have much lower targets, although 3,900 isn't that much lower than where we are now. The rate we're going, that's my target. It's a target, not a stop and reverse necessarily. Here's where we are, wave gray C. I think it has a ways to go, but it's possible to count this as being over. Doesn't make it the only count, this first leg rather. Let's focus in on gray C. And it's the same chart. Is this the one I want? We had this as 1. We had this as 2. We had this at 3. We showed yesterday how 4 could be counted as an ABC with C equal to A. You'll notice wave 2 is complex, going both over and under the end of wave 1. And so wave 4 is simple, which is what is pretty common. Now, if this is wave 1, and that's 38.2%, wave 2 is 100%, and wave 5 is exactly equal to wave 1. It's just the type of picture they describe in the textbooks. Doesn't make it the only count, but it's a valid count, and it's accompanied by major MEJT divergence. You take this low, MEJT is way down here. You take this low, MEJT is way up here. That's major divergence. And the only fly in the ointment is you can't count this supposed wave 5 as a 5-wave structure. And that's where the ending diagonal triangle comes to the rescue. Now, I don't know if this is the right count or not, but there's A, B, C, D, E. They're all clear 3-wave structures. They make an ending diagonal triangle. They come at the end of an impulsive move. They stop right at major support. It's a perfect Fibonacci pattern. So if that's the right count, we should stop right here, ideally gap up, and the target of an ending diagonal triangle is to retrace to the origin, way up here, give back and regain all of what we lost today. So that doesn't mean that's the only way this could play out. As I've said, we gap under this, everything falls apart, and we could be in crash mode. And that's something we don't know at this time, at least I don't. But if we start rallying tomorrow, there's a good chance that's the right idea, and if it's the right idea, all this gets retraced. I'm not betting money on that now, but if that starts to play out, I could reassess the situation. Well, tomorrow's pattern has the early low. It could still gap up. Today saw the high day in the first 5-minute bar and the low day in the last. It's a bearish pattern which, if maintained at tomorrow's open, don't forget tomorrow's open can substitute for today's close. If maintained at tomorrow's open, should lead to lower prices regardless of how we close. But we're at strong support from 2 TDST lines originating in the current consolidation. We had a 20-plus handle collapse in futures right after the close, was promptly reversed, implying that support might mean something. There's a wave count compatible with this leg being over, and there's major trendline support. Now, if bears gap under today's low, support has failed, the interpretation of the wave count's invalidated, they're much lower target, and if that does happen, if we gap under that low, we could see those lower targets darn fast. I think you'd be in crash mode. But if the low of day holds, the count argues for a retracement of today's decline, not necessarily all in a day. So I think the open's going to tell the story tomorrow. It's the pattern with the early low. Doesn't mean you won't gap up. This is a candidate for the end of this leg, but there's still more downside to come. Doesn't mean it comes in a straight line, and we might have a chance to re-short at much better prices. I think the open will tell the story, and that is today's call.